Going into 2025 for real estate business planning, I've gotten a lot of questions about how do I actually set a goal that makes sense. I'm going to dive into that for the next couple of minutes. It won't take long, I promise. So, first of all, you have to have a goal, you have to have priorities, and need to have strategies. The goal is in the North Star. Where do you want to end up at the end of the year? Priorities are 2 to 4 things that you must do in order to hit that goal. Strategies are 3 to 5 ways that you will complete your priorities. Goals, priorities, strategies. It's a GPS. With a GPS, you need to put in your destination. Then the path to get there is to be figured out. But first, you need to know where you want to go. First thing to discover is the goal. How do you do that, though? First thing I want you to do in that is to calculate your personal expenses. What does it cost for you to be a human on this earth? That includes your monthly or yearly bills. You might know those numbers one way or the other. Obviously, monthly, you would just multiply by 12 to get the yearly. Other spending that you have that you would like, other money that you would like to spend, such as debt reduction, investments, charity, your college fund, vacation, other things that you want, not necessarily things that you need. With all of this, be reasonable. Do I want to invest $500,000 next year? For sure. Does my business and the current structure of that allow for that? Probably not. So be reasonable with those goals. Make it something that feels like it's doable based upon your track record and also your trajectory. This is a sample of how you might calculate that. Your bills are $100,000 a year. This is your mortgage. This is the power in your house. This is your water bill. This is your trash bill, your groceries, all of the spending that you do as a person, not as a business person, but as a person, your family, kids' activities, etc. Debt reduction obviously is above and beyond kind of those minimal payments would be go into the bills. If you do have things like your mortgage, etc., this is additional debt reduction on top of those structured payments. Investments, charity, college fund, vacation, other ones, you get to choose. This is your area to figure out how much money do you want to make next year and what are you going to spend it on? And you come up with your personal spending number. From there, you need to come up with your business spending number. What does that look like? We're talking about the things that you have to spend money, even if you sell 0 houses, what you would need to spend money on. Brokerage bills, board dues, Bright, Central Lock, your car driving around town for business, marketing, travel and training, your cell phone, other. There's a lot of different things that you could have in your business expenses. This is just a sample of some things that you might have. And I added that up to $48,000. The rest is just math. It's not that complicated. So we're going to take gross commission income, which is the amount of money that is on that Alta settlement statement or the HUD one that states that commission will include generally a percentage and a brokerage flat fee. The brokerage flat fee is also commission. It's very misconstrued that it is not commission. However, it is considered commission. Minus cost of sales. This is anything that is paid only if the transaction closes. So it's money that goes to your brokerage, whether it be a split or a flat fee or both. It's money that goes out in a referral fee. It's money that goes out to a third-party transaction manager who you pay at the time of closing. It's all of those things that only come out if the deal settles. What it is not in real estate is things like marketing, the sign in the yard, the lockbox, things in order to sell your listing. Challenges in real estate, the listing may not sell, and you still have to pay for that sign. You still have to pay for that lockbox. So gross commission income minus cost of sales equals net commission income. From there, you want to subtract your business expenses to get your profit. After that, you want to make sure that you are giving enough money to Uncle Sam in order to pay your quarterly taxes. Unfortunately, a lot of realtors do not do that, and they see their profit as their take-home pay. And then when Uncle Sam comes knocking on their door, they don't have anything set aside for him. So minus tax savings is your take-home pay. I put in a cost of sales as 20% and tax savings as 30%. These are great conversations to have with your brokerage leadership or with your tax professional, depending on what the structure is. For example, if you're in a capping model and you don't get a large number of referral fees or other fees paid at settlement, you might have a fixed amount for your cost of sales instead of a percentage. So here's some numbers. Taking those same numbers that we calculated earlier with $150,000 take-home pay needed, plus and the $48,000 business expenses. This is where the math gets mathy and it's a little tiny bit complicated. So I actually have a spreadsheet that you can type a couple of numbers in, specifically your take-home pay, your business expenses, and then the cost of sales percentage or the tax savings percentage, and it will actually calculate this all for you. But I'm going to walk you through how that works. So in order to net $150,000, if you're setting aside 30% for your tax savings, you would need to make $286,000, setting aside 30% of $64,286 to net $150,000 take-home pay to pay for all of those personal expenses that we calculated earlier on. From that, so that's the profit number. Above that, you'll remember we have the expenses number. We need to add that in to our number. So the profit number plus expenses equals what you need your net commission income to be. So in this case, it's $262,286. From there, you need to figure out, after you've paid what the cost of sales is and what you need to have as your GCI. Cost of sales being 20%. In order to have a net commission income of $262, you would need to make $327,857. Again, this is a world where, if you are in a capping model, our cap is, if your cap is $20,000 at your brokerage and you know that you're going to pay $20,000 at your brokerage, the cost of sales number will be static instead of a percent. If you run a team or are on a team, that number might be higher than 20%. Average sales price is $500,000. This is just an example. All of these numbers are examples. So figuring out how from your GCI goal, because on this last one we discovered we needed to make $327,857 GCI in order to take home $150,000. The unit goal is 20, and that comes from an average sales price of $500,000. Again, this is specific to you. What is your average sales price? What is your average commission? I put in a number, a random number. This is not to suggest that you should use this number or see it as a standard or a suggested fee. Every bit of commission is negotiable. So if that was your average, that average commission would end up being $16,250, resulting in 20 transactions. Again, the first two numbers can be changed based upon your business, and then you calculate that based upon to get the third and the fourth number. So that gets us to a unit goal of 20, and then we're ready to build our business plan. Specifically for this video, I'm talking just about the goal. So we're there. The goal is to sell 20 homes for $327,857 GCI. That's how we have our goal. The next pieces are going to be to decide what are our priorities when it comes to lead generation. With a larger team, with somebody who has operations and people who work for them, the priorities are likely going to be slightly different. However, for the average real estate agent who is a solo agent, who may have some administrative help, but is really kind of the jack of all trades in their business, the main things I want to focus on are lead generation strategies and how you get there, which I will create another video kind of talking about different lead generation strategies and how what you need to do in each category for those priorities in order to hit your goal.